Hi everyone, welcome to today's trade of the day. And for today's trade of the day, we will be looking at the pound yen, right? So pound yen, what I have here is the weekly chart. And if you were to look at the candlestick formation, right, price has made a high. And last week we ended off with a bearish engulfing, a very clear bearish engulfing. Okay, and this week we also see the pound yen pulling back lower. So we can say that this is a confirmation of the bearish engulfing pattern, and we can expect price to drop even further. Now, the movement, right, started from here, so we can actually use Fibonacci retracement from the low to the high and open all Fibonacci ratios, right? And we can see that the first support level is the 23.6. So this is the weekly, okay? I'm going to highlight this 23.6. This is the weekly. So this is still looks like there's further room to go for the drop, okay? Let's quickly go down to the daily. Nothing much has changed on the daily, okay, except it looks like there is a double top pattern forming thanks to the bullish engulfing on the weekly. And let's quickly go down to the 1 hour. I want to show you guys this intraday opportunity. All right, so I'm going to tidy this chart up. Now over here we see that price is sort of basing sideways. This is the 1 hour. We see that price is basing sideways in this area, right? Trading within a wide range. However, for me, the drop has already been confirmed because there is, if we were to connect all these lows with a trend line, right, ascending trend line support, okay, there is a very clear, ascending trend line resistance. There's a very clear breakout to the downside, followed by a pullback, right? There's this pullback candle and a further drop. So this, for me, has already confirmed the drop, and we can actually play down towards our target that we have identified on the higher time frame. Now that we're on the 1 hour, the question then lies is that, you know, where would our entry and our stop loss be? Okay, stop loss here is very clear, okay, because this is a sideways structure. Our stop loss can be just outside of the sideways structure, right? So it's just above. This can be our stop loss, right? Remember, we always want to, firstly, the stop loss is the level which we know our idea is invalidated. The second reason, the second way that we put the stop loss is a bit beyond a key resistance, right? So this structure is a key resistance zone, and we put our stop loss slightly beyond it. Now we can also use Fibonacci retracement of the last movement from the high to the low, and we can see that price could very well pull back to the 61.8, right? The 61.8 also falls in line with a spike, and at the same time it's also in line with the ascending trend line resistance. Alright, so this therefore can be our sell entry. Okay, so just remember 61.8 is over there. So right now it's just really a waiting game for price to come back up to this level, the 61.8, okay, before a big drop lower. Alright, so this will be our intraday trade of the day. Of course, we can have what you call intraday take profit level, right, at the last swing low here, which is also a key support level, right, a key support level. So we have two possible take profits level. All right, and this works out to give us a very nice risk reward. Last but not least, we can also put the final nail in the coffin using indicator. And we see that price is holding below the moving average, and MACD is way below zero with no divergence, showing room for further bearish momentum. All right, so that's the time that we have for today's trade of the day. Wish you guys all the best. Trade safe, stay safe, and I'll catch you guys again. Thank you.